afternoon, good evening, traders from across the globe, and welcome to the 1149th edition of Short-Term Trading Live with Oscar, and that would be me. Good evening, traders. As I said in my last video, these trades sure are turning out to be short-term because you cannot count on the market going in any one direction during the day anymore, not lately. I'm sure we'll get back into some kind of a groove, but for the last few days, I've been giving you what's called a neutral omni, starting off on the neutral side and then seeing which way the market will go. I'll have to tell you that certainly we're looking for the downside to start this session off. We're going to be looking to sell the S&P unless something else happens. So we're starting off from the downside, but I would not be surprised to see this market turn around and come back up because we are in a bull market. Short term, likely lower. Long term is still very, very intact, traders, and you will see that in the chart segment in just a moment. Remember that futures trading can be extremely risky and cause substantial financial loss. It is not suitable for all traders, and believe me, you can lose way more than you have just in your trading account. In this game, be careful, know what you're doing, do not trade above your wallet. All right, a stop can absolutely be your best friend in this insane volatility, this insane volatile environment we've been in. You better not even come near these markets without a stop, because it's all right to make a donation. It's not okay to give all the money to give away the farm. You know what I'm saying? In trading, winning and losing is an integral part of trading, but giving away your whole trading account because you traded without a stop, that's just pure stupidity. Don't do it. Put stops in. All right, so short term, likely lower, like Thursday, Friday. Long term, very intact, traders. I'm going to tell you this right now. Do not fall in love with the downside, and I'm going to show you why. I've got some great charts. I think you'll like what you're about to see. If you like these charts and you'd like to learn more, come on down to livewithoscar.com. Come to my free trading room, and I will help teach you the art of technical analysis. With no further ado, let's go look at some charts. Okay, traders, the first chart I'm going to show you this evening is the emini S&P, but it's not quite a chart. It's called an MACD. It's an indicator. Moving average, convergence, divergence, and I'll tell you what, it's usually an indication of a few days, if not longer, in the same direction. So it's not a very quick indicator. It's slightly slower. It stays behind the market. But when you get the blue and the red to cross over like this and the blue to continue looking right down, you know that's telling you that you probably have at least one more day, if not two, if not longer, on the downside. MACD starting to look ugly in the emini S&P as well as in the Russell, right? Russell, one of our leading indicator markets. MACD not looking very strong there. NASDAQ, MACD, once again, I'm showing you this because of lots of indicators out there that are very short term and whip around constantly. This one is a very slow mover. It does not whip around, so you can sort of count a little bit more on the signals. Now, never, ever, ever trade any market based on an MACD alone because it is useless and will kill you. It will destroy your account. But the MACD used in conjunction with many other indicators and chart formations, it can be quite helpful. Next, Dow Jones Industrial Average. That one doesn't look very good either, the MACD. Then you've got the Nikkei, right? We go all the way across the globe. Not looking very good there. The DAX is in question. We have to see it open tonight where it settles tomorrow, and then I'll show you the DAX. So traders, just before I get to tonight's masterpiece, I want to show you that one of our very leading indicator markets, the Dow Jones Transportation Average on the weekly bar chart, is looking fantastic. Look at this channel. There is nothing wrong with this at all. In fact, this is an inverted head and shoulders. So short term, sure, we can pull back. Long term, very, very strong looking. Now let's take a look at the masterpiece chart. But traders, that was the short term. Long term, let me tell you right now, do not fall in love with the downside. This chart is showing you that the market is in good shape. The trend is still very, very intact on the upside. In fact, look at this chart. It goes back from 2009, the lows that were made after the crash. This is tonight's masterpiece. It is in the NASDAQ. You might note that we've had these red channels inside of this big purple channel all the way from 2009. It's been perfect inside of it. We have gotten above that channel, came down and tested it and held, have created another one of these just like all the rest of them, but this one got above the big trend. And I'll tell you what, right now, we may pull back a little bit, but when I blow this up for you, you will see that's a very good looking chart. And in this version, you will notice that not only did we get above the huge channel, this is a very well-defined bull flag, traders. The target just off this flag alone and inside of this channel brings us to 38.50, 38.60. Very nice target. So we might mess around inside this flag, which takes us down quite a few points, but we should hold here, if not here, and take off for that target. Long term, the trend is very intact. Short term, you can have some pullback, traders. Pull your own charts, do your own homework. Always look at your charts first before accepting anybody else's opinion. So, traders, you've seen the charts. There's my technical argument for why. Short term, yeah, so we can go a little lower. Long term, the trend is absolutely intact. And remember, do not fall in love with the downside. This is a big booming market, traders. Do not fall in love with these dips. They're great if you get a short signal, it comes off a little bit, but after that, out and sidestep it, because see the arrow? We are starting off on the downside, right? But you can't hold me to these arrows for 24 hours anymore, because how could you hold any short-term trader to an arrow these days? So starting off this way, maybe we'll end up that way. At some point, we can end up this way. I know one thing, put your stops in, because it's starting to look a whole lot like this when you trade these days. Looks like spaghetti logic, right? Put your stops in and make sure you've got a trading plan. If you don't know how to derive a trading plan, come on down to livewithoscar.com. Come to my trading room. I'm on camera. I'm on microphone. I will help you understand these charts. Now, for you stock traders out there, I'm offering stock recommendations lately, just like I give the commodities recommendations. So if you trade single stocks, and you are somebody that likes to be out by the end of the day, maybe 2 days at the most, come down to livewithoscar.com and speak to me about it. I've got some killer stock recs I'd like to share with you. Now, like everything else, you need stops. It's not always going to work. It's based on technical analysis, but it is the same OMNI you've been following in the S&P for quite some time. I'm just now opening up the doors for the stock traders. If you trade stocks, come on down to livewithoscar.com. All right, traders, I'll see you at the site. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video 1149, and do not fall in love with the downside. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.